Robert,
Yes, Yonder.
the sky is falling.
Not again.
Sales. Sorry, no, sales are doing okay, but did you know that the average price for real estate, based on the Toronto Regional Real Estate Board stats, is actually down?
Actually, down. Well, there's a compared to what, if I ever heard one.
Oh, year over year, it's down. On this episode of Real Estate Chat with
Yonder Perez.
and Robert Eid, prices dropped a whopping 1% year over year, despite sales shooting up 37%. Robert, why don't you do some explaining here?
Okay. Well, I start out with the very boring Toronto Real Estate Board chart and the comment of why do we examine statistics? And the reason is to find out what's normal and then to see how far up or down we are from normal. So in this case, we see the typical thing that's talked about, which is not just year over year or month the previous month, but this month and the 3 previous years. Now, does this indicate anything to us? We might say that we're not good, not bad. So that's their chart, and it's too skinny a slice of time. So that's why we start there with sales, and we'll go through a few things, and we'll end up at prices.
Okay, well, is it significant though, Robert, that sales popped this much, 37% year over year, when we're seeing in previous years, year over year, there's been declines, at least in January.
Okay, well, this is the first year, this is the first month of the rest of your life. So it means absolutely nothing to compare it to 1 month. Was last year, January, particularly strong, particularly weak? Was it in the middle of a trend up, in the middle of a trend down? We can't tell from just this. And we can't tell from month, year comparison. I'm sorry, we can't. And we also can't tell from any kind of seasonally adjustment either, because seasonally adjustment endeavors to make January equal to June. And guess what? They're different. They're so different. You cannot possibly come up with all of the factors that affect it. And then a new one comes in and you don't bother changing your algorithm because you spend so much time doing it the other way. So you just let it run. Anyway, so if we look at our regular calendar sales, we see that the 4,000, the star down in the corner with the black X shows us that we're only 9.42% below the 10-year average. It's the 15th best January of the last 29. Now, when we see the red line going up and down with X's on it, stars on it, is last year. And the very peak of it was the 14th best May. So we already started off this year, instead of being like the 23rd or 31st or something or other, we're already the 15th best January. So compared to all the Januaries, it's a little bit below average. So it's not good, but it's certainly a lot better than being a minus 30, minus 40, which we've seen on so many months recently. Now, does that tell us anything? No, what that calendar one doesn't show us is what this school year does show us is there's a trend every year. Now, we're bucking the trend in that instead of being sort of the same, the blue star being sort of the same level as uh, December, because that's normally what it is. If we look at all of them, they're piled together, you can't see anything, but it's up. So sales have improved from terrible to weak. So we have a weak number of sales, but it's much better than what we've seen. So it's good. We're still 18, 19% off of what we'd say was a hot market in terms of sales. And we're way better, like 10% off the average is way better than what we've seen recently. So
What do you
that's
attribute this improvement in? Because I mean, again, it's too early to tell, but it is significant, and I'm sure people are saying, "Hey, wow!" I mean, despite it being just 1 month, indicating what the rest of the year might look like, but
you
how,
got it.
how did things pick up all of a sudden?
The Bank of Canada gave hints that interest rates are going to go down. And there was widely said in the December 15th CREA publication and all the commentators and the December, whatever it was, 8th publication from Treb that things were soft, that deals could be had, that it was the time to buy. So if it's the time to buy, guess what? That with the inducement that interest rates are going to come down, 2%, no, 0.5%, maybe, um, got people to pick up some bargains. So they did. And what we saw last month was some investment type of houses rather than owner occupied type houses get sold. There was a lot of estate sales, amazing number of estates. So will it tell us, will we say the same thing in June? No, but in June we'll know what kind of a year we're having. As I always say, the market goes to sleep from the 15th of December to the 15th of January because anybody that's got any money is on vacation. Then from the 15th of January to the 15th of February, we find out whether it's going to be last year's price or this year's price that will prevail. On the 15th of February, we'll know whether we have an up market, a sideways market, or a down market price wise. By the 15th of March, we're going to be full blown spring. Whatever we're going to have is we're going to be having it. By April the 15th to May 15th, it's either full bloom or full bust by then. So we
So
just have to
that
let it unfold.
time is coming up, and I'll ask you before we finish the episode, there's a lot more charts to go through, but I'll ask you what our real estate chat viewers should do, considering some of them are probably making that move in this first quarter, perhaps second quarter. So
Sure.
looking at another sales chart here, Robert, 5-year and 10-year averages.
So this one is the same chart, except it's got fewer sales on it. We can see that compared to the 5-year, compared to the 10-year, compared to the maximum, like we're 40% off the maximum January that happened in 2021, not that long ago, but just cresting towards the peak of the boom. And so it shows there's resilience. It shows that like 1% is nothing on price. It shows everything is fine. It's just diminished, which I've been saying through the whole thing. There's nothing wrong with the real estate market except it's not a boom. And we got accustomed to a 10-year boom. We go to a chart now where I had to make it into a 16-year because that's all the data I have, that it was a 10-year boom. So it's all boom. How can you compare anything to a boom that's not a boom? So anyway.
So we'll call price level. I mean, the sky is not falling with a 1% price drop. Just might have
No,
happened.
particularly if it gets reversed. We have a stock market mentality that's being applied to the real estate market, and the real estate market does not work on the frequency that the stock market does. The stock market changes 7 times an hour. Ours changes once a quarter, maybe. There's nothing that's that urgent about it. So, like if you're looking at the overall picture, individual properties, like that's what you're asking. What should the individual person who goes back to? Are you going to live in the house? If you're going to live in the house, then scour everything that's for sale because you will now notice if you were in December looking and now it's in January looking that everything's got 5 offers on it. They say there's 35 offers on it, but we know that most of those are wasted time. But there's 5 offers on anything that's any good. Okay,
And
so
this
this is
might
the Mitch Corman chart, which says, are there more houses over $2 million? And no, there's less, but that's to be expected at this time of year. Anybody that's got any money is on holidays in between December the 15th to January the 15th. So we've had 2 weeks of whatever the next market's going to be and 2 weeks of total holiday. So can't say anything good or anything bad about that. Okay, now this is the crucial one. This is what we talk about active inventory. Active inventory came plummeting down. And if we were content to use the 5 and 10-year average, we'd see that where we are now at 10.1 is still 24% and 10% above the 5 and 10-year averages. But if we go back out 16 years, because I've only got data that starts at 08 for inventory, we'll see that we're minus 10. So we're still soft on inventory. Now that may change. There's many people that are induced with the pace, with the reported prices down the street, that they say, well, maybe this is the year we should sell our house doors, and more listings will come. I think we can be sure of that. And then there's also going to be a disappointment that, interest rates aren't plunging like we were led to believe by somebody who thought they knew what they were talking about, but they were wrong. Because if we see a surge like we saw last year, we see a surge in prices, if we see a surge in sales, then that's going to be information, the new data that our friend Richard Tiffany Macklem will say, we haven't quelled inflation. Look at the resilience in the real estate market. We can't drop interest rates now. That will spur them on. We don't want to spur them on. So
it's a pretty interesting situation, I guess, that we're in, because depending on where the market goes, it kind of, I guess we seal our fate depending on what we do in this spring market.
Well, everybody guesses. Everybody wants to buy at the bottom. Everyone wants to sell at the top. Guess what? You can't. So if you're a spec, like you deal like a spec. If you're owner, well, then you just have to be a little bit more cautious, and there will be another house around the corner that's just as good. It'll be have a bigger backyard and a smaller, and it won't have a swimming pool. You'll like it better. So don't be disappointed. Just be unrelenting in your search. Okay. So because of the time and other things that we have to do, all we have for our favorite topic, the relist comparison share, is the chart that came up from the board, which says that 21.5% of all the new listings that came out. Now, I think they're fat on listings. I don't know how they got 8,300 new listings if there's only 10 active. Like there weren't that many sales. My comparison chart just doesn't add up and add down to come up to that number. I thought it was going to be 6,600 new, but okay, I'm not doing the calculation. I was wrong. I was wrong on the price, so I was wrong on the number of new. Now, if you do the math and you take off those 1,791 off the 8,312 they say were there, you got 6,525. And the 1,791 is 27.5% of the net number of listings. So 1 in 5, 1 in 4 listings are being terminated and relisted. The only stat that will show that is going to be the days in the market where you have the all of the property days on the market added together plus the how many days was it on the market when that listing finally sold. So we'll get to that next. So here we have days in the market. Number one, both of them are higher. The 5 and 10-year average say that we're 40% above on the property days in the market, 40% longer it takes. And the listing was just that property is 34 to 43% longer. So we know that this happens. We know that it's not a raging market, and 10 years of boom will give you a low number. So it's not a boom. We know that for sure. But part of that difference in between those two blue and red line is the fact that some of those are being canceled and relisted with the same firm, with the same owner, within the currency of the first listing. Okay. Months of inventory. This shows us in perspective, going back to 1990, courtesy of Ron Hoth, that there are times when we've dipped down to 2.36 months of inventory compared to the sales. That sometimes it's much worse than that. In 2009, which was the global financial crisis, we thought the world was coming to an end. We only got up to around 8. And there's been times within our lifetime when it went up to more than 10 months, 12 months, 14 months, 18 months nearly of inventory relative to sales. Sales were soft, prices were falling, and interest rates were high. So there's a long perspective look on active months. But if we look closer to where we are now, we can see with more detail that the two lines running across, red and green, are we spent 10 years with an average of 2 or 1.9 months of inventory in January. So now we're at 2.9. Well, it's way better than 4, but it shows tight market conditions. And again, we're using active, how many were for sale in the last day of the month compared to the number of sales that were achieved in those months, rather than mucking around with new listings and all that stuff. So it's tighter than it was. It's definitely not, it's the seller's market as well. I don't think we have that chart done that. We don't have that chart. It's definitely a seller's market.
Let's look at average prices now. And
Exactly.
despite,
Price is what everybody's concerned about. Now, unfortunately, I wish they started this scale at 600,000 so that the variations would show more drastically. In this case, if we only looked at these 3 years plus one, we say, oh, one was big high. Like the rest of it seems to be okay, just sort of putzing along. But the big high is what everybody's concerned about. I bought at the peak. And so that's why we do statistics. We look at the long-term view. So the next one is where I was wrong. I try and guess based on what's happened in the past, in this case, 23 years. The average for the 23 years in between December and January was 1.2% up. Of the 16 up years, the average was 2 whatever it is, 5.7, I can't quite, 8.7. And the 7 down years was minus 2.3. So I thought it was an up month. The ones I'm watching, the listings I'm looking at, selling quickly, I thought it was going to be an up month. So I guessed it at 2.44, would put it at 1.11111111, which is just the way I do it. but I was off by 84,000. I was off by like 8%. The reality is that it came out at 1026,704, which is minus 5% from last month. Now, that goes against the chart over the last 23 years. How can we say it? Again, it's the mix of what sold that month that gets averaged. So if there was an unusually high level of inexpensive properties, then that's going to bring the average down. If there's a high level of expensive properties, it's going to bring it up. So we now have a huge, huge territory, Clarington to Hamilton almost, that's included in it. And there are some that are less than $1 million. And so if you get some action in there, which first time buyer, owner occupier is buying under $1 million, it's going to bring it down. So I was wrong. And okay. So the next one shows us compared to what? And we looked at this January to December chart. This is the third best January that we've ever had. We're a smidge by 1.1%, less than we were a year ago. And we're considerably lower than we were in the best January ever, 16% off that. And the market continued to go up. And so off the peak, we are 23% off. But it's not the end of the world compared to everything we've seen. It's the third best January. If you're always, my joke about real estate business is if you're the second best salesman in the month, every month, you're going to be salesman of the year. Because someone is always going to do great one month. But if you're a summer two every month, you're going to be salesman of the year. So the next chart takes us with what we looked at the last time we looked and saying, okay, here's this big post. It's the school year that we're looking at. And we said, okay, so we're a little bit above where we were 2 years ago and a little bit, and there's a huge big gap above where we were 1 year ago. What's it going to be next? So we thought it was going to be somewhere in the middle. And we were wrong because we're 1 dot something or other percent below the previous year. Now we're 17% off 2 years ago, which is a little bit worse than where we've been on the 2 year scale. But we still have this wide open space. So the blue box down there says last year in the last 2 quarters, we had low sales and steady prices, scratching our head. Early this year, we're almost good, only 10% off the averages, and prices are fading. I say, don't worry about it. Only half the month was really cooking. We would have, if the whole month had been the same pace as we saw in the second half, we would have seen sales not at 10% under, we would have seen it at average, and everyone would have been saying, hey, good, finally we're back where we should be, don't belong. Let's see what February brings us. Okay, and then if we look at prices, here's our, prices fell down. Now, I'm not quite as concerned about prices falling down between December and January. It's unusual, but it's not unheard of. But if we look at this whole thing, in 3 of the 4 past peaks, by this time, 2 years is next month, 3 of the 4 previous charts had returned to 90% of peak by this time. The exception is the long drawn out 1996 to 1996. We're going to beat inflation to the ground, a drag that we all had to go through where things settle out around 70% of where they were. It does recover, it does come back, but we have the central bank trying to correct one overshoot with another overshoot, and we're just going to have to see.
Education, our real estate chat viewers. I mean, we call the spring market and what's going to happen and what everybody should be prepared for. And for those real estate chat viewers who have liked and subscribed, and some who have not yet, make sure you do click that subscribe button. They may be planning a move. They may have been contemplating this move since late last year. What is our education for them? Like, what do we tell them they should watch out for? Should they, if they're selling, enter the market now and contribute to this inventory that's going to be eventually increasing? Do they wait and see where prices are going first? And if you're a buyer, is now, I mean, we're hearing multiple offers happening again. There's that fantastic news article about 85 offers on a Mississauga home, and it's sold for just under $1 million anyway. What do buyers and sellers do? Please educate, Robert.
Okay, well, buyers are going to do the opposite of what the seller's going to do. So the seller is going to have to decide, is this the time he wants to, or she or they want to capitalize, cash in on the market? If they're not buying something else, then yes, I would say do it. Sell, take the money. You can put it 5% in a GIC, whatever you're going to do. Buyer, it's the opposite. You haven't got the low interest rates that you want. Remember, it's never going to go down to 2%. It's going to go down to 4.5% for a first mortgage for 5 years. So the real estate market right now may be giving us a false rally. It gave us a false rally last year. We can't say. Why have you not bought now? Why all of a sudden do you want to buy now? And without knowing a whole range of characteristics of what the buyer's needs are and reasons why they have not yet, we can't make a recommendation. One partner may be saying, I told you, you should have bought, I told you. And like, you don't want to go to bed with that every night because so you got to solve that problem. Interest rates will go down. Interest rates are coming down. There's a way to do it so that you can help to get the seller to give you help. He gives you a second mortgage for a portion. So you average that with what you have to pay on a 2-year rate, which is too high. And so between the two of them, it averages out to somewhere about where you're going to end up in, 2 years when you refinance it. There's a lot of things that go into it. It's not a spec deal, especially if you're buying for somewhere to live. The school's not going to move. There are other houses on that street. There are other homes in that neighborhood. If you've done a complete survey where you've looked at 20% wider area and 20% higher price, then you know that market as well as any realtor that's been watching that market for 20 years because you know what's available right now and you know what the trend is and you know what people are buying. Are they buying it for student housing? Are they buying it because it's on the main street and they think they can get caught up in this new wing of new units on main streets? It's not complicated, but it is complex.
Well, if I'm hearing you right, Robert, work within same thing we've been repeating for
How can it change? Yeah, how can it change?
do the right thing for you, work within your budget, work with your local real estate broker who knows what they're doing in their real estate market and have them explain to you the dynamics in your market. Because if you're looking for a place, chances are you already have a bias towards where you want to live.
You'd like something there, yes.
Things will be mentioned, nothing new. But there are opportunities anyway in any market as long as you know which one's the right one and you're working within your
And
means.
you can complete the deal. You've got a commitment in your back pocket.
That's right. So thanks for watching this episode of Real Estate Chat. Make sure you leave in the comments if you have any questions, if you have any input about how you feel the market is doing. And we're going to keep a close eye on the market for you. Lots of juicy episodes to come. Thanks for watching. Take care and bye for now.
See you later.